It is all about indicators. Everyone always asks this question. What's the best indicator? What indicator should I be using? How do I know what indicators to watch? There's so many different indicators. There's moving averages and simple moving averages and exponential moving averages. Then there's RSIs and there's MACDs and there's all these different clouds and all these different arrows and squiggly lines. How do we know which one to go? Well, I'm going to explain that to you right now. I'm going to make your life easy. So if you watch this entire lesson, by the end of this lesson, I absolutely guarantee you will know which indicators I use every single day, on which charts, and you will know why I use them as well. You'll know how to place them, you'll know how to trade them, you'll know exactly everything you need to be a successful stock trader. So what do we have here? What are stock indicators? Technical indicators are heuristic or mathematical calculations based on the price, volume, or open interest of a security. So basically, traders, this is just going to be a math equation. It's going to be a math algorithm that you don't need to do. Your scanners, your broker is going to do it for you. So when you're saying, what's the moving average over the last 50 days? You don't need to do any sort of equation. You don't need to do any sort of math. You just got to click, boom, put on the 50-day moving average, and you're all set, ready to go. But really, these whole entire indicators are to help you become a better stock trader. You want to understand that less is more. The last thing that we want to do is just be filling up our charts with so many indicators that we can't even read. There are sometimes traders that post images in chat and I got to hold my tongue a little bit. And I got to say, I don't even know what you're looking at. I have no idea how you're able to see the chart, the price, and how you're not overthinking every single move when we have so many different indicators. So there's two different types of indicators for those who do not know. There's overlays and oscillators. What we have here is overlays. Overlays, simply enough, is going to be the indicators that go over your chart, go over the candlesticks. These are going to be the squiggly lines that are going within the chart, in between the price action, in between the candlesticks. Then we also have our oscillators, which are going to be either above or underneath our chart. So starting on off here, traders, let's talk about with our overlays. And as you can see from these examples, our overlays are just going within the graph. This is when you see the red, the green, the yellow, the blue lines. They're within the graph, within the price action. We also have our oscillators, which are going to be underneath or above, depending on where you put them. It all depends on your preference, but they all do different things. So first thing that I want to talk about right now is going to be the most popular moving average, the 50-day and the 200-day moving average. Now, for anyone that's wondering, why do we use these? We use these because simply enough, they are the most popular. Every single stock trader uses the 50 and the 200-day moving average. Now, this is SMA, simple moving average. Do not set 50-day and 200-day EMA, exponential moving average, or you're going to have different prices. Everyone right now, go to tradingview.com. Type in a random stock. What automatically comes up on the chart? The 50 and the 200-day moving average. Everyone go to finviz.com. Let's do it together real quick. Let's go to Finviz, www.finviz.com. Let me click a chart right here. I'm gonna click LABP, okay? Guess what comes on up? The 50-day and the 200-day moving average. There is the 20. I personally don't use it, but there is the 50 and the 200-day moving average. What am I trying to explain to you guys here? What I'm trying to explain is that every chart, every data, every graph, every investor is going to be using this moving average. And if they're using this moving average, this is where we're going to have a lot of strength. The more people that see that we have the 50-day moving average at whatever price, let's say $10, that is where we're going to have more influence to buy at $10 and sell our shares at $10. Same exact thing at the 200-day moving average. The 200-day moving average, if I see that everyone is selling at $100, that's where I'm going to sell. And if we can recognize this, we're going to not go against the mob. We're not going to go against the influence. We're going to be able to profit with that influence. So simple moving averages are often viewed as low risk areas to place transactions that are going to have high profits of reward. We only use these on the daily chart. So 50-day moving average, as you guys can see here, what do we have? We have bounce play off the 50-day moving average. Then we have top resistance at the 50-day moving average and top resistance at the 50-day moving average. You can also see the 50-day moving average right here on CEI. Top resistance, 50-day moving average, top resistance, top resistance, top resistance. In all reality, yes, guys, all these moving averages are another line of support and resistance that we know is going to hold up as a very strong factor. So we can always clock it in our head saying, boom, this is going to be a place that people are going to sell. Let's go ahead and take a look at literally today. on our 50-day, 200-day moving average and see what we have here. So let's take a look over on the SPY, make this a full chart. And you know what I'm gonna do just to make it even clearer? Go back to like a monthly chart. Okay, monthly chart. Monthly chart is rarely ever touched. Okay, and what do I mean by that? Is that when we hit an indicator on the monthly chart, it usually always holds up as the best dip buy. So the 13 EMA. We have not gotten to the 13 EMA, but as you guys can imagine, it's going to be another very strong influence. That is this green line. This green line, notice, whenever we're above the 13 EMA, it is considered bullish. Whenever we're underneath the 13 EMA, it is considered bearish. So just a little crash course, what we're going to get to on the 13 EMA, it's the flexible trend line. Whenever we're above the 13 EMA, you never need to sell. You can keep holding, and over time, we'll continue to move on up. But underneath the 13 EMA is where you can do put contracts and continue to hold and hold and hold. So each one of these candles represent 1 month. What if I notice we are above the 13 EMA right here at 213? I can hold for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, all the way up for about, 2 years straight until we crack this area. Once we crack this area, that's where I know we're starting to get a very nice drop. So it's almost like the flexible trend line telling us when we're actually going to have crashes in the market. You could see 2018, you guys could see 2021, you guys could see 2022. 13 EMA on large time frames will tell us exactly when we're actually getting these big dumps in the market. If we're bullish, we can just continue to stay strong like we are right now. But notice what the 50-day moving average is doing. The 50-day moving average is getting perfect bounce play, perfect bounce play, perfect bounce play. That's what's so magnificent about this. Let's go back over to a weekly chart. Weekly chart. Take a look right here, right behind me. You guys can see bounce play perfectly off the 200-day moving average. Look at here. Bounce play 50-day, bounce play 50-day, bounce play 50-day, bounce play 50-day. Take a look right here. Bounce play 50-day, bounce play 50-day. These are all going to be perfect areas where we can all say to ourselves, hey, this makes sense. Hey, I can understand that people are going to be buying and selling at these areas, and that's going to give us another line of support and resistance. So, as I was talking about, the 13 EMA, this is only going to be used on the daily chart as well. And this is, remember, EMA, not SMA. Now, someone take a wild guess on why I use this. Because it's the most popular. And using the most popular indicators are going to give us an idea where everyone else is going to buy and sell. You need to remember every single day when you sit down in your chair, it is not what do I want to buy today? It was what is everyone else going to buy today? Because who cares what I want? I'm one little fish in the ocean. But if I can understand what all the whales are doing and what hundreds and thousands and millions of fish are doing, well then, hey, I'm going to get an idea. But if I just say, what do I like today? Who cares what I like? What I like means nothing. I want to try to figure out what everyone else likes before they wake up, before they get into the play, before they say, oh yeah, this is a good one. I want to beat the mob, the majority of buyers, to the big spike, to the big rip, to the big run. So if I'm seeing that everyone's going to sell at the 200-day moving average or get a bounce play off the 50-day moving average or get a bounce play off the 13 EMA, that's where we are going to have a lot of success. Let's take a look at a few other plays. Now let's go to a daily chart here. Daily chart. And let's type out, let's go Tesla. Tesla, daily chart. Let's do a couple different things. 13 EMA. I'm going to go to indicators, go to edit. Let's go to get rid of the 200-day. Boom. Let's get rid of the 50-day. Boom. And let's just look at the 13 EMA and try to figure out how can we be able to trade this. So the best thing for you to be able to do is just always say to yourself, I want to be a swing trader, which means I want to hold for multiple days. I don't want to hold for a very small period of time. I can see that the 13 EMA, this green line, held this entire way on up. As long as we are above this area, we are considered bullish. Even though we have big red days, we don't need to sell. Then what do you realize? Well, we also have a big drop all the way back on down. Big drop all the way back on down. Guess what? We are bearish. You don't need to be scared out on a green day, right? You can do the same exact thing all the way on the way back on up. Say, all right, I want to hold for a few days or as long as the 13 EMA holds, and you can make money on this way. You can also see, right here, or if you wanted to, let's go right towards this mark, which is going to be bearish, 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 bearish. And you could be able to hold it from here to here and be able to make all this money on puts as the entire stock starts falling on down. So is it going to be 100% perfect? No, nothing's 100% perfect in the stock market. But what I will tell you is that it's going to give you an amazing idea of if I should be bullish or if I should be bearish at this time. And having that amazing idea is definitely going to help give us some more clarity on if I should be going in on this play or out of this play. Like right now, I see that Tesla is bearish. So having Tesla bearish, that is extremely important to me. All right, because now I don't want to be going against the mob, against the momentum, saying, hey, maybe I should be going on the call side, right? We don't want that. So let's keep this party going here. We learned about the 50-day. We learned about the 200-day. We're learning about the 13 EMA. Remember, we're only using those on the daily chart. Now, there is something very important. Why? Why only the daily chart? Because let's go ahead and let's re-add these indicators right here. Why do we only use them over on the daily chart? And the big issue is when you use them on the 1, 2, 3, or 5 minute chart, they are going to change too much in value. The daily chart is where they always are going to be on. So I'm going to add the 50-day moving average here. We're going to go indicators. We're going to add. We're going to scroll on down to SMA. We're going to put 50-day moving average. Bada boom. Great. Now, we are going to go over to a 1 minute time frame. Now, you might say, all right, I'm in on a 1 minute time frame right here. Let's bring up SMCI. The 1 minute time frame over on SMCI shows us that that bounce play is going to be at 1,062.70. That's what it shows me. But now let's switch on over to a 3 minute time frame. And no. Now what are we talking about? Now the bounce play is at 1,036. What are you talking about? No, I'm trading in a 5 minute time frame right now. No, now the bounce plays out 1,000 and not. So as you can see, there's too much confusion. When there's too much confusion, that's not worth it for us to trade. We want the idea that every single person is going to be showing up at the same time. Imagine if we had a party, right? We had a surprise party, guys. Surprise party for me. I'm throwing myself my own surprise party. Pretty sad. But I'm going to be walking through the door at 8 o'clock. But I tell some people, get there at 9 o'clock. Some people get there at 6 o'clock. Some people get there right at 7:30. Some people are going to be there. Some people might be walking in. It's going to be like a half surprise. Surprise. I want that full-blown surprise for my private surprise birthday party. Okay? I planned way too hard for my surprise birthday party for me not to be getting the #1 reaction saying, I can't believe you guys all showed up. Oh, for me? Oh. Traders, we need it all on the same page. And the only way to get it all on the same page is from the daily chart. Okay? The daily chart is how we're going to get it all on the same page. But you will see that the 50-day and the 1, 2, 3, 5, 200-day, 1, 2, 3, 5, that is going to be way too different, right? So that's not what we want. So you might be, again, noticing something right now. Saying, all right, Deck, I got you. Daily chart, 50-day, 200-day, 13 EMA. That's going to be where everyone's on the same page. And we can see there another level of support and resistance. We can see when we come down to these areas, we get dip buys. When we come up to these areas, that's where we have resistance. It's another area for us to be able to know when to buy, know when to sell, know when to be able to look for reversals, and get an idea when the momentum's going to shift. Perfect. But Deck, I see that you do have an indicator over on your 1, 2, 3, 5 minute chart. This is going to be the VWAP. The VWAP is the volume weighted average price. Now, want to see something crazy about the VWAP right here? VWAP, we are right now, right around 1,040. Let's change this on down here. Guess where we're still at? 1,040 in a 3 minute chart. Guess where we're at in a 2 minute chart? Still at 1,040. Now again, we change this over to a 1 minute chart. Guess where we're still at? Right next to 1,040. Let's change this back to, again, a 5 minute chart. Guess where we're at? 1,040. Let's go back to a 10 minute chart. Where are we at? 1,040. We're all on the same page. I'm trying to have the best surprise party for myself ever. We're all on the same page here. Can you see where the issue was with the 1 minute, 2 minute, 3 minute, 5 minute chart with the 50-day and 200-day and 13 EMA? Can you see how the VWAP though doesn't change? So if it doesn't change, that's bringing us clarity. And now I know, hey, this is going to be a great area for dip buy and bounces. Just like we bounced right here and bounced here and bounced here and bounced here. It's almost going to be the same exact thing as the 13 EMA, but in a minute chart, not on a daily swing trade type of idea. Where on the actual day, we can say, hey, we are bullish as long as we stay above this VWAP area. We are bullish as long as we stay above that VWAP area. Let's take a look at some other charts here. See if, we can stay bullish as long as we stay above this VWAP area. Well, in this case, over on the SPY, what can you guys realize? You can actually see the SPY went underneath it and was bearish and bearish and bearish and bearish and bearish until we broke back on up. So it's like, it's really neat. I use it a ton when it comes down to penny stocks and penny stock trading, where we can, take a look over on some plays and know when to actually start pulling the trigger, maybe on some possible shorts. Like KULR. KULR, nice spike. Bounce play, bounce play, bounce play, bounce play. Is it odd? Does anyone think it's weird that we're always getting the perfect bounce plays right off the black line? No, that's where everyone's buying. That's where everyone's getting their dip buys. That's where everyone's looking to get filled on these bounce plays. BACK was the #1 top gainer over on Friday. Let's take a look at how this reacted. BACK, #1 top gainer on Friday, Bounce play, bounce play, bounce play. Then guess what happened? It cracked underneath it. Cracked underneath it. Hey, plays over, resistance, 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 and sell off, right? So we can see how that happens. We can see how great that is where we stay above it, then we go underneath it, then we sell on off. That is huge for us. That is awesome and really cool to be able to recognize. Now, let's keep this party going here, traders, a little bit more. And what we have at this time is we can actually take a look over on our next level of indicators, which are no longer overlays. Now we're heading to the top and bottom, and that is going to be our RSI. RSI stands for Relative Strength Index. It is going to be giving us numbers from 0 to 100. Anything that is underneath a 30 is oversold. Anything that is above a 70 is overbought. So we really have 0 to 100. If you're underneath the price of 30, you're oversold. What do traders do that have oversold stocks? Oversold stocks, they look to dip buy. What do traders do when they have overbought stocks? When a stock is overbought, they look to lock in profits. So for this example, take a look at Microsoft. Microsoft, we are underneath a 30. Guess what happens? It's oversold. People push it back on up. Take a look right here. Overbought. Guess what happens? The stock falls. Falls until it's oversold. Guess what happens? Spikes back on up. Spikes back on up till it's overbought. Guess what happens? We fall back on down. Let's look at today's examples. Let's go over, go here, add our indicators. So let's go to indicators. Let's add our RSI, Relative Strength Index. You always want it set to 14. That's just always the default. And we'll be all set, ready to rock and roll here. So let's bring this on up. Let's talk about what we have. Let's look at some blue chip plays just so it's nice, easy, simple, and we have some true clarity here. So I'm going back over to a daily chart. Let me go over to a daily chart so we can be able to see this. This is another, indicator that I personally always like to use daily charts on, just because it's going to give us more of factual clarity. It's going to help us out a lot better than just using a minute chart. Minute chart changes too much. There's too many variables. So what do we have here, team? Simply enough, we already can see in the bottom right-hand corner, anything that is underneath the price of a 30. 30 is going to be right here. That is going to be when we're considered oversold. When you're oversold, watch for the moves to come back on up. Anything above a 70, which is right here, is going to mean that we're going to start being overbought, which means there's a great chance that we're going to start falling back on down. So let's take a look at this chart and let's see where we're at here. So first things first, that really stands out to me, right? First things first, that really stands on out. From here to here, we are extremely overbought. Now, why are we overbought? Scroll on down, scroll on down, scroll on down. Guess what? We have an 85.90 on the RSI all the way in this region, right? Right behind me. 85.90. Guess what happened once we started getting too overbought? We had this massive sell-off. We also see the RSI then start coming all the way back on down. Pretty awesome to recognize. Now, what do you guys realize when we have this bottom area? That bottom area also lines up great showing that bottom area. Notice where we're at, a 30 on the RSI. Traders and investors are now saying to themselves, hey, wait a minute. We're now oversold. If we're oversold, this is a great dip buying opportunity, which means we move our way back on up. And then we usually go back and forth, back and forth, back and forth. But when we have over a 70 on the RSI, or when we have over a 70, when we have these areas, it's going to definitely tell us when we could look for reversals, when we can look for drops, when we can look for good indications that things are going to start falling in the near future. So you can do this on Meta. You can do this on Amazon. You can do this on any sort of big play to know when is a pullback going to come. Now, it doesn't have to be the biggest pullback in the world, but it is going to tell you when there's going to be selling. Every little top notch that broke a 70 is followed by a pullback. Every little top notch that breaks a 70 is followed with a pullback. Every little top notch, even though we're still consistently moving on up, you can see how we still have week-long drops. Those week-long drops are from the RSI indicator showing us that we are now considered overbought. So that is going to be absolutely awesome and absolutely great. So traders, when it comes on down to what are going to be our main indicators, on our daily chart right here, we are only going to be using 50-day SMA, 200 SMA, and 13 EMA. Overlays, different areas of support and resistance. As for minute charts, guys, what are we using? Minute charts, we are using the VWAP and the VWAP only. 1, 2, 3, 5 minutes. That's going to change. As for the RSI, that is going to be our oscillator, which is going to be underneath on the daily chart as well. Are there more indicators out there? Of course there are. There is going to be a MACDs. There's going to be different clouds, different indicators. Average directional index. Sure, let's throw it on. Let's add it. True range. Why not? Let's add it. Bollinger Bands, let's add it. D-Marker, let's add it. Dechantion channels, why not? Throw it on there. Multi-period, throw it on there. MACD, of course I need that. Are you kidding me? Let's throw in another VWAP. William percentage, of course I like William. Let's go dollar value. Who doesn't like money? And bada boom, bada bang, I'm ready to become a stock trader. Traders, if your chart looks like this, you got too much going on. I only use 4 or 5 indicators at most because I don't want to be adding too much where I'm saying, okay, we're going to go up. Wait a minute, we're going to be running into the dollar value index. Well, hold on a second, we're going to sell. No, look at this. We now have, again, the Kamikuchi Cloud Magagi going. And oh, we can't look at this right here. Oh, we got this one going on. Oh, do you see what's going on here? Do you see what's going on here? We can't do that. So find the plays that work for you. Find the indicators that work for you. I use the most popular indicators because they have the highest amount of influence. I also use these indicators on certain time frames where I know everyone's on the same page and people aren't disconnected in any sort of way. So use those indicators, study up, check it on out, make that money, hit the like, hit the thumbs up, subscribe, all that good stuff. Come on over here on Tradecaster.com and let's make this money.